Welcome back everybody to another weekly general update for the markets, and we've had a pretty interesting week as usual. We had a continuation of the very strong rally in the US, and then finally a bit of a turnaround on Friday night. Started off fairly severely with some poor jobs data, but recovered half those losses by the end of the session, so really wasn't all that bad as it looked early on. It's just a reminder, this is general advice only. So let's have a look at the action for the week. As a summary, the S&P closed up just 4 points for the week. Had a much bigger week last week when it was up nearly 6%. So it formed a new short-term high. We'll have a look at that chart in just a minute. 1570. Sorry, that should say 1370. Looks likely, but it may pull back a little first. In fact, I think it probably will. Gold was about 3.8% higher on the week and had a big jump on Friday night in reaction to the jobs data. So short term, I think it's bottomed out. In fact, I'm pretty confident it's bottomed out in the very short term, as in the next few days or so. But in the medium term, I'm not 100% convinced yet that we may have bottomed. So I'm still a little bit cautious on what we do with gold and silver in terms of entries. Silver did break through a down-sloping resistance line during the week, so it's looking more positive in the short term, but still looking to buy the dips. Copper was higher again, looking very strong, and just basically reinforcing the indicators that I've been talking about now for the last 6 or 8 weeks, that were really pointing towards the demand for copper being stronger in the second half of the year. And the ASX 200, it ended up closing 1.5% higher for the week. We've underperformed the S&P significantly since April, since the start of the correction, but just in the last week we actually did a little bit better than the S&P. So let's have a look at the charts, and we'll start first of all with the S&P, and you can see we've had we had a correction that didn't quite get to the area that I was looking for. I was looking for either 1248 to form a double bottom here. We did get to a low of 1258, but I thought it more likely that we could get down to this 1233 level. The market didn't make it in the end, and has moved so strongly over the last week to 10 days that I would suggest that we're probably not going to revisit under these lows now. So what I am expecting, though, having had 8 out of 9 trading sessions higher, is that we will get a bit of a pullback of this range which started on the 24th of June to the peak, and the most likely area that it will pull back to, just that one, most likely area it's going to pull back to is this 1318 area. So we could see just a little bit more on the downside, down to here, and then I think we'll have a crack at 1370. I would expect to see some sort of pause around 1370, so we may then muck around in this fashion for a little while, but eventually I'm expecting that 1370 will break to the upside, and we'll be heading back up towards this 1450 area initially. So this area here, or just under it actually, about 1440, and then possibly even to the old highs at 1550 over the second half of the year. So that's where the probabilities sit at the moment. So in terms of our own trading, I think looking to buy the dips. So if we get a little bit more downside in the US market, then that would be an opportunity to start to build a little bit further. So that's why in the written alerts this weekend, I've not recommended anything to increase our overall exposure. I think our overall exposure is about right now for the market conditions, particularly in in terms of the mix of stocks that we've got. So happy just to sit where we are for the moment. Let's have a look at the Aussie market. So this is it on a monthly chart. We did have a little peak below this this support line, this inclined support line, but quickly recovered. And looking at it on a daily basis, you can see that 46.52 was an important resistance area. We actually closed at 46.55, so we've closed just fractionally above it. It's not definitive, so it's possible that we could now get a little bit more downside first. But if the US market goes where I think it's going to go, then our market will head back up into the 4,700 range, I'm sure. But we may see a dip in that first. Let's just have a look at the sector indices. So you can see here on the finance index, we did have a very definite downtrend. We've now broken out of that downtrend. Are we going back into uptrend? We have broken through this short-term high here on the 14th of June. So that's a preliminary indicator. The volumes aren't particularly terrific, and you can see we're still underneath the 50-day moving average. So a more definitive break for me would be above that point there. So if we were able to close above about 43.80 on the finance index, then that would indicate finance index moving back into uptrend for me. So still a little bit of a question mark there. Now materials, we'll look at it first of all on a weekly chart. You can see still a strong uptrend in progress on materials. We just had the 4 weeks down. In fact, sorry, this is a monthly chart. So we had 3 months down and heading back into uptrend. Looked at on a daily chart. It's looking stronger than the US, than the finance index. But again, the definitive proof that we're back into uptrend is a close above about 13,900 on the finance index. Let's have a look at healthcare. So healthcare had a significant run up. We then got a retracement, which is normal, a retracement that you'll notice is on lower volume, and then we've started to move away quite strongly on Thursday and Friday. So I would expect to see this continue to head up in this fashion, which is going to be good for Cochlear. And finally, just looking at the energy index. So energy also starting to recover. There's a little less clear on where the resistance lines were, so still need to really break out of its trend, but you can see quite strong volume behind the energy index on Friday as well. Now let's have a look at the commodities. We'll start with copper. So this is a weekly chart on copper. You can see that we retraced to this important 391 level, held it. That was basically the middle of May. We've held it then since the middle of May through to the last 2 weeks. Last week was very strong for copper, and you can see elevated volume as well. And we got good follow through this week, although we did close a little off the highs. But that's looking pretty good. And the fact that copper's held up so well all this year when stock markets have been down and there's been a lot of negative news and doom and gloom, but the actual copper price has managed to hold quite well. So I think that's a really strong indicator of what to expect in the second 6 months, which is why I've been looking to build into copper stocks. So we've got some of the smaller ones. We've also got BHP in there as well. This is gold. We had a big sell-off. I thought we got 1472 was a potential area the support. We got to 1478, so again didn't quite make it. I was of the view that 1410 was a distinct possibility, but I would say the strength of this move now, the fact that we've moved back almost back to a double top here, suggests to me that in the short term there's probably not too much dramatic downside, and there certainly is some good support, but it's proving to be a little bit tricky as to the entry price on gold, so it just remains a day-by-day proposition. Now next is silver. You can see that we did break a down-sloping resistance line on Thursday night and closed a little bit higher on Friday night as well. I'm in the same boat with silver as I am with gold. I was looking for maybe $31 as an entry. It may well be now that that's not going to happen, so now I've kind of raised my sights to maybe 33 to 34. Given the way markets are at the moment, I really don't want to be paying nearly 37 for silver, although in the short term it could go up a bit more to 39, but I don't think the risk-reward ratio favours buying in at this point now. I think you really need to be buying the dips on silver and gold. And I'll do my best over the next few weeks for members to identify where those entry points are. Now just going back to the S&P, just to confirm that I think the area most likely, and this is not a guarantee, if this strength of this trend is really there, then we may not get back to this 1319 level, so let's call it 1320. So that would be my target area to be either buying the S&P if you're looking at buying that index, or to really start increasing exposure to the Australian market at around about that level. But we'll just have to monitor that day by day. So that's it for now. We'll talk again next weekend. Cheers.